Hello, folks. Welcome back. And yeah, it's all about the cash flow. Cash flow is bigger when vol is higher, and vol has certainly been higher lately. We also got a higher than expected CPI read today. If you are tuned in for unusual option activity, you are in the right place. Congratulations. We're going to be describing that unusual option activity. Also taking a look at the markets that have been whipping back and forth, and why exactly that is. Well, we're going to give you some shots to figure it out for yourself as well. But yeah, volatility higher, definitely inflation higher. So let's get started with today's 3 at 3 with those comforting words. Let's get started with today's 3 at 3 for the 11th of May 2022. Just giving you this one again because, again, we've talked about it time and time and time again. I counted 14 separate rolls that we've had in this particular name. Coinbase, they bought the May 13th expiring 120 puts when the stock was 140. So that told you something, looking for a pretty big move. Then, of course, we burned through 120 like a hot knife through butter. And I kept rolling down my 140s to the 130s, to the 120s, to the 110s. You get the idea. So we kept doing that all the way to yesterday when we rolled to the 75 puts. So as you see, originally paid 445, sold a lower strike as it fell because, of course, puts pick up steam to the downside, just like calls pick up steam to the, you got it, upside. So that's where it was minutes ago. 55.82, down another 23% overnight, which means our 75 puts would be worth $20 right here. I sold them way before that just because I'm greedy and because I needed some winners to match up against some of these losers, folks, because, yeah, even Jon has losers, and they ain't fun, and I don't go out there and shout them from the rooftops. But I do cut them. So, you know, if I'm buying a spread for $1.10 and it's a loser, boom, I'm hitting that spread and getting out of it fast. But I'm still losing money on that spread. Maybe I lost 50 cents on that spread, you know, between 40 and 50 cents on a given spread. Okay, move on to the next one. How do I do on this one? Well, long the 75 puts, and short the 65 puts into the earnings last night, did pretty well. Anyway, especially since we were trading 62 in the pre, so it did really well. Anyway, still falling, and of course, it's not all their fault. Some of this falls on that lunatic trade in Luna and UST. If you don't know what they are, Luna is the protocol, if you will. UST was a stable coin and it was not very stable. Anyway, luckily didn't have either of those, but now today I bought a bunch of Luna. We'll see if that works out. It might not. Occasionally I do step in there and catch the falling knife. I've done it today in Luna. So that's crypto trade, not a stock or options trade, and certainly not subject to unusual option activity. If you would like to see how AJ Monty, CMT, Chartered Market Technician, trades these markets, how he picked the tops for all three major indices, tune in tonight. It's going to be free. We're both going to be on. It is May 11th. That's today at 4 p.m. Eastern Time. Can't say enough nice things about AJ. He has nailed it. There are people on his services that have made untold hundreds of thousands, millions of dollars because AJ, being a bear, but being a bear that bases it on technicals, has slaughtered it. And he's going to tell us what he sees now. Does he see a further burning down to that 3850 level for the S&P? Or does he see us trying to stabilize and bounce? Tune in for free, but you got to register. MarketRebellion.com is where you register. That's MarketRebellion.com. JD, just from yesterday, folks, just showing you how I trade. Okay. So JD, I talked about the 20,000 May 45 puts. You could have bought them for $1.19. They went up today. I bought, since these were May, and it's going to be fast time decay, I bought the 51 puts at the money. Like I say, buy at the money put, sell out of the money put. As it dropped, I sold the out of the money put. I put both on the screens here for you to see. So that, my friends, is a 3.5 point spread. I own the one, sold the other, and the difference between those strikes, 51 here and 47.5 here, that's the maximum you can make, $3.5. I paid under $1 for the spread. Right now, the spread is trading. If you take the differential, 385, 221, you get the idea. Let's call it $1.60 ish, $1.65 if you want, from under $1. Nice return so far. And I've addressed time decay, and I've addressed the amount of money I wanted to invest, which was at or less than the amount that they paid for those 45 puts. Bang. So I'm in the trade still, haven't taken it off. If it goes down hard this afternoon, I will probably take off 50% because we're pretty much at the level where I could do that right now. Crypto Convo, great conversation with Randall Crowder yesterday, COO, Chief Operating Officer of Funware. PHUN is the NASDAQ symbol. Make sure you check that out at cryptoconvo.com. All right, quickly, TLT, another big trade here, but for a change, they're buying upside. They're buying upside. So TLT falls to 116.51. As the TLT drops, that means interest rates go up. So if you're betting that the TLT might rally to 118, you would be saying interest rates may have topped and are rolling down. That's what's expressed in this trade, letting you know. 42,000 is 4.2 million share equivalent of that ETF, TLT. So be aware of that, and be aware that they paid $254 for those. And you know your buddy John is going to be buying at the money, selling out of the money, just like I just described in the puts, except in reverse. Buying at the money means I buy the 116s, sell the 118s or the 120s against it. Bang. Second trade, SE. This is C Limited. SE, bearish puts. It's a $61 company, and they bought 9,000, which is 900,000, just shy of 1 million share equivalent. June 50 puts. So you've got a little over a month, call it a month and a week, out into the future put that is considerably out of the money. Is it protective? Perhaps, but they bought them quick. So what will Uncle John do? Uncle John will buy at the money puts, sell another put underneath that put as it falls. Now, there's no guarantee that it falls. Because of that put activity on the offer, I want to be on the trade that way. I want to be leaning short, but I do want some protection. So I'm going to sell a put against every put that I buy, creating that same spread. Bang. Now for the final of today's 3 at 3, HYG. This one, high yield. Well, somebody's betting that maybe somebody has some problems. They buy 20,000 of the July 71 puts in the high yield, which is not the same as the TLT. They're both based on interest rates and so forth, but one is high yield, which ain't government, folks. So HYG, 20,000 is 2 million share equivalent of that particular ETF, the high yield HYG, and they wanted to be short, but look what they bought, 50-cent options. Now, is this a hedge against the high yield? Just basically setting a floor, which would be, that they're betting that if rates do explode to the upside, they're not going to get cleaned out? Maybe. In this case, I would buy at the money and sell out of the money again in these puts. I have 2 months, so I don't need to sell that other put very quickly. Bang. That's me. I will be on with AJ Monty at 4 p.m. Eastern time. You should join us. Honestly, you should, because some people say every ship at the bottom of the sea was loaded with charts. I will say if they followed those charts, they wouldn't have hit the rocks. So make sure that you join us. AJ Monty, Jon Najarian tonight, 4 p.m. Eastern, for free. It'll be entertaining, I promise. And we'll have some great insights. Check it out at marketrebellion.com. And then you can also check out our services at marketrebellion.com/get started. Thank you, folks. Boom. See you soon. I'm Jon Najarian.